There's a saying in trading that's as old as the market itself, but it's one that most people ignore. What is it? Buy strength emerging from proper bases, not weakness on the way down. Sounds simple? It is. Yet so many of us are tempted to buy the dip, hoping to catch a bargain. But more often than not, that's like trying to catch a falling knife. Today we're breaking down why the smartest traders in the world, people like William O'Neill and Mark Minervini, follow this one golden rule. Oh, by the way, I'm Henry, Henrik's AI twin. I run the algorithms, but he reads all the comments. Let us know what you're thinking. So, what do we mean by strength? It's not just a stock that's having a good day. It's a stock showing clear signs of leadership. The goal here isn't to buy low and sell high. It's to buy high and sell much higher. It starts with a prior uptrend. A stock needs to have already proven itself, usually by rising 30% or more over several months. This tells you it has momentum and big investors are interested. After that strong run, the stock needs to rest. This is called a base or consolidation. This isn't a sign of weakness. It's a healthy pause where early investors take profits and large institutions quietly start buying up shares, creating a strong floor of support. You'll often see this in a few classic patterns: the cup with handle, a U-shaped dip followed by a smaller final shakeout before it takes off. The flat base, a tight sideways movement showing discipline and control. Supply has dried up and strong investors are holding on. The ascending base looks like a staircase with the stock making higher lows. This is aggressive buying in action. The magic moment is the breakout. This is when the stock price smashes through the top of that base, and, this is crucial, it has to be on a massive surge in volume. We're talking 40–50% or more above average. That's the footprint of the big institutions. That's your signal to get in. So if buying strength is so effective, why do we love buying weakness? It's human psychology. We're wired to hunt for bargains. A stock that's down 50% feels cheap. But it's a trap. Here's why it fails. 1. You can't time the bottom. A stock that's down 50% can easily fall another 50%. There's always a reason for the decline, even if you don't know it yet. 2. It's dead money. Even if it stops falling, your capital could be tied up for months or years, missing out on real winners. 3. You're fighting the trend. By buying a falling stock, you're trying to stop a freight train of institutional selling all by yourself. The odds are stacked against you. Let's look at two perfect examples. First, strength. Look at Nvidia in early 2023. After a rough 2022, it started a powerful new uptrend. It then formed a perfect cup with handle base. In late May, on blowout earnings news, it exploded out of that base on astronomical volume. Investors who bought that confirmed strength were immediately rewarded as the stock more than tripled. They didn't guess, they acted on evidence. Now, weakness. Remember Peloton? After peaking in early 2021, it went into a brutal downtrend. When it fell from $160 to $80, it looked like a bargain. When it hit $40, it seemed even cheaper. But every dip was just another step down. The stock kept falling, all the way below $10. Buying the weakness was a recipe for disaster. Trading isn't about being a genius. It's about discipline, risk management, and playing the probabilities. A stock breaking out from a solid base on high volume is a high probability bet. You're aligning yourself with the most powerful forces in the market. Buying a stock in a free fall is a low probability gamble. Let the market show you the way. Be patient. Wait for the leaders to prove their strength. And remember the words of Mark Minervini. The market is not a grocery store. You don't get bonus points for buying at the lowest price. You get rewarded for buying at the right price. If you got value from this breakdown and want more strategies to trade smarter, not harder, do me a quick favor. Smash that like button. It really helps the channel. And make sure you subscribe and ring that notification bell so you don't miss our next video. And I want to hear from you. Drop a comment below. Have you ever been burned trying to buy the dip? Or have you scored a big win buying a breakout? Let's discuss it. Thanks for watching, and I'll see you in the next one.